guys, thank you so much for joining me again. I know it has been a long 6 months since I have been back with the channel, but I am sitting here today with James Hedges, one of my stellar lenders, and he is here today to explain to us a little bit more about how the mortgage market is moving in this crazy market that I know you guys have been hearing about. So let's get into it, shall we?
Absolutely.
Awesome. So Jimmy, which qualifications are most important to a lender when you are shopping for a loan? Is it credit score, debt to income ratio, steady employment? What does it look like for you guys?
So I'd say there's not one thing that's the most important. Of course, every lender loves good credit, great long employment history, but we really look at three things. We're going to look at your credit, your income, and your assets. Between those three things, we're really going to see what you can qualify for, and if we have to compensate for one, it's good to have something better in the other two categories.
Okay, so that sounds really good. So if I had like a 650 credit score and a good debt to income, I'd be good to go?
Absolutely, there's a lot of them.
Oh, sorry. What if I didn't have a job though? What if I lost my job to COVID?
Unfortunately, with no income, it's hard to qualify. A big portion of qualification is the debt to income ratio, and income is a main component of that ratio. So without any income, it is very difficult to qualify for.
So Jimmy, as far as credit scores do go, what is the minimum qualifying credit score to get a home loan these days?
Absolutely. Different programs have different requirements, and different banks might have different requirements over and top guidelines that allow for different credit scores. So I'd say a good rule of thumb, just to kind of qualify for as many programs as possible, is a 640 credit score. If you have that, you're basically eligible for all the programs that most lenders offer. Now, some banks may offer lower options, but not all banks do. So that 640 is always a good target.
All right, you heard it here, folks, 640. So Jimmy, being a seller in the market, is it better to sell your home first or purchase a home and then sell your home after?
Good question, and the answer is it depends. I would always recommend talking to your real estate advisor because based on your situation, there's a lot of different options, and what's going to work best for you is a little bit more specific to your needs. So generally speaking, if you have a contingency on your offer, it's going to be harder to get your offer accepted when you try to buy a house. But right now it's a seller's market, so as a seller, you might be able to negotiate the buyers to rent back the home to you, so you have an option to stay there and continue looking and getting ready to buy and sell your house before you buy after closing on the sale of your home. With no contingency, it's very easy to buy right now if you have those funds in hand.
Absolutely, and being a seller, you can get just about anything that you could need in order to make it smooth for yourself, because buyers are willing to do whatever it takes to be the winner on your property. So keep that in mind, sellers. So unfortunately, we are also seeing a lot of homes going for way over their list price, which I guess fortunately for sellers is helping their value, but at the same time, it's tough to be a buyer out there. So are you seeing a lot of gaps between the appraisal and the contract price for most contracts these days?
I will say we're seeing more than we used to. As the market appreciates quickly, sometimes it's hard for the comps to keep up. The best person to talk to about this is your real estate advisor, as they know what comps have closed in the neighborhood you're looking at. They can tell you what they feel like the CMA or comparative market analysis is worth on the home you're looking at. So, a house that's reasonably priced is typically going to appraise. We don't have many issues for reasonably priced homes. If someone's going to, ask $100,000 over what the comps will allow, then we're more likely to have an appraisal issue. But it's very specific on the exact scenario. So again, consult your real estate advisor and see what works best for you.
And lastly, Jimmy, we are in North Carolina, so we have this weird thing called the due diligence fee, and also earnest money, which most states do have. These days, we're seeing them quite a bit above usual. Tell me a little bit more about what you're seeing there.
Yeah, so in a competitive market, people are trying to use due diligence or just the deposits on the contract to try to stand out a little bit. So they're offering more than we would typically see, whereas sometimes you see $500, $2,000 in due diligence. I've seen $20,000 in due diligence. I've seen people waive due diligence periods. I've seen them waive earnest periods. So really, they're just saying, I really want this house, and they're using these funds up front to make their offer stand out. It is a lot up front, and you are putting it at risk because there's not a lot of recourse. But if you win the bid, it's a very good thing right now. It's hard to win those bids. I will also say that all of your deposits, earnest money and due diligence, are part of your down payment. So you are prepaying your down payment. And as long as you buy the house, it's just coming off the funds to close. It's all good things.
Awesome. Well, Jimmy, thank you so much for joining me today. This was awesome to get a few answers from someone who's on the lending side. I mean, they hear from me all the time, but it's really good to hear from someone on your side.
Abby, thank you so much for having me. I love being here, and I can't complain. I always like having a beer with you.
Cheers.
Cheers. Nastrovia.
How do you say it?
Nastrovia.
Nastrovia. Nastrovia.
Don't quote me on that either, people, because I am not Russian, Belarusian, or